All right, good peoples. Happy weekend. It is my Sunday morning and your Saturday evening. I've been working on this for a lot. I mean, it almost got to be analysis paralysis. I mean, I have so much data, and I thought just simplify it. So I did because I want to get my point across. Um, you know that I love the metals and made a lot of money in the metals. Again, I never fall in love with a stock or a sector, but I remember. So I had a lot of love for it. The main reason I got to know it really well, and I'm using that knowledge that I know it very, very well to tell you about an urgent call to action. This is no longer just me saying, hey, check out the metals. This is me saying, you're making a big mistake if you don't own some of this sector. I've come to the conclusion that the markets will turn down. They haven't gone up to a new high yet. Now, anything's possible. They could go on to new highs, but they look like to me they're topping. And I just mean general equities. That doesn't mean all stocks, but it means it's hard to swim upstream. So even some of my favorite stocks that aren't commodities and aren't precious metals might be under pressure, especially if the market turns down. Um, I don't think there's not a crash out there, but there can be a slow, we could have a 20-25% pullback in the stock market. And even given that, I think these metals and miners will do very, very well. They may initially, if it's a hard 8% or 12% in 2 or 3 days, have some liquidity. But that's when you want to gobble them up because they're not going to stay down at all. They are the go-to. This is where the puck is going, and it's increasingly going there. So having said that, let's take a look. So I just a recap. Gold's been breaking to new highs. I think it's imminent here in the next 1, 2, 3, 5 days that gold closes at a new high. You know the difference between open up. It's just what the stock market did when it was trying to get to new highs. It opened up high and then it pulled back. So gold did that same thing on Friday, but it was still up for the day. It just didn't maintain the close. So a lot of analysts, a lot of people, they have no love for the gold sector. I mean, if you looked at, the net sales in gold and precious metals, hugely negative in North America. But you look at India and you look at Asia, they're continuing to buy. Look at the world central banks. They know what's up. They know inflation is raising its ugly head. They know that earnings aren't really keeping up. They know that paper currencies and GDPs and debt levels in the first world countries are increasing. So, all those things collectively. So, I'm going to take you back through a period of history and I'm going to talk to you about some things quickly. So the other thing is the immediacy is next month we have the FOMC. So now saying that there's a 90% to 95% that there's a September rate cut. I totally agree with that. Now, why is that relative to gold? Because gold performs better in a declining rate environment. We've been in a rising rate and then a flat rate environment, and goals continue to do well in those. And so that's just like, when you have a bull market, you have a bull market. I always have that saying that something's going to happen, but I don't know what it is that they're going to attribute gold going up to. I know why it's going up because paper currencies continue to go down and it's its time. Things happen in cycles. Okay, there's so much good data, it's hard to decide which data to show you. So I'll start with these seasonality charts. It matters, guys. And it's not perfect. No, oh, Bruce, look, your chart shows it goes up in March. Well, 2 years ago in March, it didn't go up. You know what happens? These are seasonality averages over 30 years. But let me get to the right place here. But what you have is, look at your months here. So look at August starting here. August to July. Well, we didn't have a bad July, but kind of an up and down. More up here than down, they show in July. But look at the August spurt, followed by September, and then a pullback in October. So if this is even halfway right, but I'm not even using this. Like I said, this is probably one of 30 things that I see that's causing gold to go up. But I wanted to point it out to you. Look at silver. Silver, not so much. August is kind of showing it going down. And again, silver has been playing catch up over time, over 6 months, over a year, over 2 years, over 3 years. Silver will outperform gold in its growth rate. So you have a gold to silver ratio, which is up in the 90s now. I see that coming down by the time the end of this bull run in commodities, probably back to 35 or 40. But that's a massive outgaining in silver. I mean, I see, gold could be 10,000, 10,500. Some people say 15. If we get a reset, there's rumors. I was going to do this video, but it's a little out there. I don't want people to hold me. Oh, you said this. I mean, we could see 30,000 gold. But that would only be because they revalued the US's gold in order to show us not so much in debt. And I would rate that as a 45%, 40% chance. That's pretty high. But we got to have a goal reset. They just come out one day and say, we're valuing what America holds in Fort Knox. I know everybody's going to say there's no gold there. They're not telling us on purpose, right? I think there still is gold there. I don't know how much. But they don't want us to know that kind of information. The investment world really doesn't want you buying gold. Some of these analysts have never recommended gold. Why are they 4 earning cycles late in telling you that the gold miners are a buy? It's on purpose sometimes, guys. Newmont blew out their earnings. 90% of these big gold companies are blowing out their earnings. Somebody always say, "Yeah, but Bruce, look at this one. They missed." Yeah, bad management, poor grade, weather, strike. I mean, there's always things that can affect an individual company. But in general, with these metal prices up, and I'm going to talk to you that in depth over the last 2 gold bull runs, exactly how they took place relative. Did they outperform the S&P? Did they go up relative to the metal? So you have all of these things that play out. And this is setting up, this is a lifetime opportunity, in my opinion. And you need to participate. So again, what do I get? 300, 500, maybe 1,000 views. I'll get 3 to 5 to 6,000 on my income funds. So I've decided that I'm going to stop doing these. I'm going to create a Patreon, and my Patreon will cover income funds and it'll cover miners. But I think you'll get the most benefit out of miners because then I have a lot of recommendations, what I'm buying, what I'm selling, and I'll do some of that. So I have a very cheap, I have 3-tier membership. I'll get into that later. I don't want to do sales pitches. You guys know I don't like promoting that. But I'd be in remiss if I didn't tell you about that. I'm still going to do some miner videos, but not like I've done before. I'm not going to give all the nuggets away, if you will, and no pun intended. All right, so silver will do well. Silver follows gold, and then in the later cycles of the commodity, there's nothing like silver. The volatility, it'll scare the hell out of you. This thing's at 35 now, sorry, 38 silver. I think we're done going below 35. I think we go on to 40, we go on to 50, we go on to 100, we go on to 150. Do I know the timing? Do I know? No. But just look at historically, it's underproduced now, undersupplied. Um, and it's consumed. Copper, silver, platinum, palladium. Gold doesn't really get consumed. All the gold that's ever big dug out of the ground is basically available. Now, somebody did right, Mike G, I think, and he's kind of in an industry that knows there's a certain use of gold, and I forgot some kind of wires, and there is. It's just so expensive, they don't tend to use it for that. And also, it's not the same conductor of electricity and current that silver and copper are, right? So, and luckily, silver's much cheaper, but silver's not going to be cheaper for a long time. Name me an asset like silver that's not at a high since 1980. Can you think of anything? How about a home? How about a car? How about clothes? How about food? Is there anything you know that's cheaper? Not really, but silver is. Inflation adjusted cheaper. It was $50 in 1980. It was $50 again in 2011. It's $38 now. It was $20 not too long ago. So the cheap prices are over, guys. All right. So I want to do a shout out to North Star of Bad Charts. Kevin, I forget Kevin's last name, and Patrick Karim, I think Karim. Him and North Star and Kevin and Patrick created Bad Charts. So you can go out to badcharts.com and see some of their posting. They're really, really brilliant chartists using TradingView. And they can do all kinds of tricks and things with it. I've always been impressed with their service. And they sell a service, and so they cover a lot of different markets, but obviously the one I'm interested in when they talk about is precious metals. And so Kevin goes to great length in doing this. I think he even stuck it on YouTube, but I'm going to paraphrase some of it. I'm going to talk to it because it's telling us the time is here. And if this breakout happens, as I expect over the next week or two, and 3 and 4, this will be something to behold. And then I'm going to tell you how to play it. And it's not how you probably think. Okay. So here's a wedge being shown. How long does this wedge go back to? Well, it goes back to pre 19, back into the 60s. So if anybody does it, anybody who's a gold bug or very familiar with precious metals trading knows about the bull markets, right? I was a young college graduate. Oh, I graduated college in the 70s, graduated in a high school 1970. So I'm of that era. I'm old, guys. But hopefully I've contained a lot of wisdom, and you certainly have experience. And if you're smart, you have wisdom. Pay attention. So in that 70s bull run, I'm going to talk about how it took shape, even though I wasn't playing it. You know, I bought my first house in the 70s, and I remember some two older guys bought it as a rental, but they stayed there the first month to set it up as a rental, and they were down telling me, but this is 1979. So this is when gold was flying about how it was going to go on 10 times, and anytime somebody tells you that, maybe it's a top. So if it goes back down to 1,000 or all that, and you say, Bruce, yeah, you fell into that trap. I mean, again, I need confirmation. But let's talk about it. So in 1970 through 1980, it was known for the silver move with the Hunt brothers, but gold did the same thing. So I don't remember the exact numbers. I know it went from about 35 to around 850 was the January of 1980 top in gold. And the same thing in silver. And it's usually marked by a big, obviously a big up move over the decade. But what you saw here was 74, 76. It was a 50% haircut, right? So that markets always tend to do that. They love to shake you out. You're riding here, you see the momentum. Somebody tells you, look at man, this thing's going to the moon. You jump in here and load up, And a year later, you're down 30 or 40%. And you go, yeah, what an idiot I was. I'm getting rid of this. Either that or you get rid of it right here when it gets back to when you were even. Yeah, that was stupid. That was a waste of money. Guys, patience is a virtue, only to have this kind of blowout top. Okay? And then look how long it traded down. And look at the down, back up. There's hope. It's going to run more, right? Just like you guys are FOMOing into the stock market. Buy the dips, buy the dips. I'll show somebody and they go, yeah, it's just, don't worry about it, Bruce, that it went down. That happened in September. That happened in February. Well, those pullbacks happen and the recoveries happen until they don't. And based on cycle work and based on other things, we're very close to just a flat out top in the general equities. Like I said, could we melt up a little further, another 10, 15% up? Yeah, but then that means we probably have a 60% pullback instead of a 30%. So again, very hard to predict exact tops and bottoms, but you get a feel. So this proceeded, right? And this is really timing wise was perfect because I'm working through all this career. I'm not in precious metals and miners. I don't even know much about them, to be honest. I'm learning futures. I'm sorry. I'm learning the stock market. I'm learning to trade. I was working for one of the big tech companies in that 1990, one of the four horsemen of the internet. So I went through that whole internet cycle. I was in Cisco. I was in all the big flying companies making money. But I was FOMOing all the time. And then when some smart people were telling me I didn't know how smart they were. Oh no, the Nasdaq that's going to 5,000 right now, it's going down to 1,500. I thought, no, not at all. That's crazy. I just ignored it. They don't know what they're talking about. I didn't want to hear that. I was getting wealthy. I was planning on retiring, and I didn't want to hear that. I just closed my ears to that. Well, what did the market do? Went down massively. How long did it take the NASDAQ to get back to 5,000? 15 years. Well, it's kind of like saying, how long did it take gold to get back? Well, quite a while, 30 years. So these tops to bottoms. But hey, Bruce, maybe I'm wrong. Maybe we just go right back down here. You know what I rate the probabilities of coming back here before going massively up here? About 10%. So I give you a 90% probability. First off, 3 knocks on the door before you get through. Okay, Garrisala way, right? You keep hitting the door with your shoulder. You hit it hard. You back up. You hit it hard again. Now you've created energy. You've weakened the frame structure, the lock, whatever is involved, and you hit it, and it finally breaks open. So that's what I'm telling you, but not just because of this chart. Many other things. So in these up cycles, there's some common things. What happens when precious metals runs like this? Well, it's typically a commodity super cycle. What does that look like when we look at a ratio of the miners to the spider to the SPX? It's up. Not only is it up, it's just clearly a decade of outperforming. 2 to 1, 3 to 1. Okay. Now, is the best place to be though miners or the metal? Well, in the 70s, it really was the metal. You went from 35 to 850. Nobody's going to catch the bottom and nobody's going to catch the top. But calculate a number on there, 15x, some number. And that's what you did. I don't know what the Dow did, but it didn't do anything near that. Maybe the Dow went up 3 times, or sorry. And in those years, the Dow was more prevalent, right, in the 70s than even the Nasdaq or the Spider. But that's a good thing. Again, I can't do every possible thing, but I tell you, if you check, you'll know that I'm correct. And you see it right here. So let me jump down to what else Bad Charts was doing with this. Well, he drew some elliptical and saying, hey, the ratio of gold is up, and then look on the pullback, went down, false breakdown, right? Scare everybody out, and then moved up. Okay. Now what is gold going to do versus the spiders? Trends down for 20 years, bull market, right? And that was really true. Think of how that market through the 80s and through the 90s, what was that decade of 90s like? Nobody cared about gold at that point. There were, what did we end up with? A dot-com bubble, right? And that's when I discovered gold. I was like, well, how am I going to still retire in 5 or 10 years? I'm burnt out, man. You work your butt off. You make a lot of money in that run up, but companies are demanding. And I worked for one of the most demanding tech companies there was. There was no 8 to 5. There was no Monday to Friday. You wanted to get paid big, and you worked like a dog. And it's dog years. It's hard on you. So the second time around, little bit different. Same outperform. This is when I really knew it and I was telling people 2003, 2004, everybody used to joke, oh, there's Bruce over there, he's studying the gold chart. And then they'd secretly come over and go, well, what do you know, I got my 401k in this. What do you think about this? Do you think this tech company is going to do good? It doesn't matter if one does good. It's swimming against the wrong current. So I can tell you that the market's going to go down, and maybe your favorite Nvidia or Palantir are still going to go up. And they probably will of some of them. But the general indexes are going to go down. They're not going to FOMO to the level that they would in an upstream market. You're going to lose more than you're going to win. So why not be in the right area? So the only difference here, and this is worth pointing out, is that we began to at least have the miners, they moved up and they flatlined with gold. Here, the whole time that gold and metals moved up relative, and oil, commodity super cycle, relative to the SPX, the miners didn't perform to the level of gold. They probably performed to the level of the spider or something, right? I didn't play them then. I played them here. And so they moved up and then stayed even with gold. And toward the end of the bull market, which happened, especially when silver was flying in 2011, January to April, the gold stocks weren't doing so well. And what happened when they crashed? The metals went down. Gold went down 30% in that 2008 Lehman Brothers housing mortgage crisis, everything crisis, a lot of layoffs. They were offering layoffs in our company. A lot of us took it. And that's when I said, I got enough money. Now, what can I do with this money? How can I double and triple the money I have now? And I was studying for the next cycle. But I had enough to just quit because I played the commodity super cycle. I 8x'd my money in that entire decade. All right. So you go through this. Now what's finally happening? I mean, if you look at gold, gold's already been running. Gold is running very well, but it's running very well along with everything else. The stock market is doing good. The NASDAQ, the spider. It's just getting started, guys. When it really runs is when it outperforms this. That's why I say, if I look out 7 more years to like 2032, I could see a Dow that's 3x. I could see a NASDAQ that's maybe 3 or 4x. But when you divide it by the number of years, it's less than probably 10%. And maybe they do much less than that. Maybe you only have 100% gain over 7 years. What's that? 12%? But they may not even do that. I mean, remember, and it's ups and downs. We could still see a 35 or 40% pullback in index averages just from this year into next year. You have to take those, and then then when you have a 10% up, let's say a year after that, it doesn't look so good. So it's not the place to make your money unless you're in certain AI, certain things, right? You're going to be way better off in commodity oriented stocks and securities. So what's happening here and why this is so important, and Kevin talks about it, is this is finally staying with gold now, starting to pull ahead. There's been 1 or 2 days when gold was flat lately, and the miners are up. So the miners are giving us all the signals that they're going to run. And I'm seeing all the signals that gold's ready to break out. I think we'll see 4,100 either in August or September. That's a big prediction, but that's what I think. So when we have that, and even if it doesn't happen then, it's not till November. This is happening, guys, and these miners and metals. Let me show you what they've done, okay? Because I've been recommending stocks, and what have they done in 30, 60, 90, 120 days? So those of you that know me as the income guy, income fund guy, and I have been that guy, and I talk about that, and I'll continue to talk about that. I'll have some recommendations. I'll have some things on my Patreon. Okay. Look at the chart at GDX. What is GDX? GDX is a large cap miner. Oh, by the way, what Kevin is using in this of bad charts, he's using ASA. It's kind of a gold and silver precious miners index. The only reason he used it, if you go back in time, and he actually shows GDX here, GDX is not that old in terms of how long it's been around. There's HUI, there's ASA, there's a few different ones. So in order to get all the way back, you need a fund on precious metals miners that travels that. It was not GDX. GDX would just be during this time frame, and it pretty much maps 1-to-1 to ASA. Slight differences. Okay. But these ratios to the S&P, and then the ratio that's miners to the sorry, that's gold to the S&P. This is miners to gold. We're starting to see it wake up and move, guys. So is an income fund the way to play this? Not unless you want to leave a lot of money on the table. I know you guys, I say that a lot. It's just me. Do I own a little GDX? Sure. If you absolutely had to have income, go play GDXY. Okay. Because you're going to get 0.69. Now, this might go up to 2 or 3%, might go up to 4%, and you may have some big payouts relative to what they paid out, but it's nowhere near what an income's going to be. But how does an income today, how does a GDXY even stack up? Glad you asked. So here we are. This is GDX on top, 71.22%. If all you did was buy it and hold it. Maybe you trimmed some off here, bought back here. Again, those are hard to do, but sometimes this one I could see when it pulled back, I might have guessed it would go here. But maybe, putting a stop in here a few points down, you just need to get back in. And one could argue, but see, I think this thing projects much, much higher now. So all of a sudden, I'm going to have a touch point here. This is going to go like this. So here's probably where our next touch point is before we get a considerable pullback. So, but if I played GDXY, I get barely half. Yeah, I get some income. But for me, that's not enough. I'm doing all kinds of things. That's why I want to have my Patreon. I'm going into the best stocks in GDX and I'm selling puts for income. And then I'm using that income to buy my Explorer, my 10x, 20x, 100x opportunities in this super cycle. Okay. So I own a basket of many, many medium-sized producers, also some exploration companies. I look for safe jurisdictions. I get into all the things that you want to be careful with, even though it's risky. I'm going to tell you that right now. But no risk, no reward. I mean, some of you guys go all in on Misty without even knowing it's somebody, picked that one pretty well. It hasn't been performing recently. Will it? I hope so. Not looking like it, although I'm bullish on Bitcoin. Bitcoin and to me is part of that super commodity cycle because it's an alternative to fiat currency. It's a store of wealth. But it needs to separate itself from the NASDAQ and the FOMO because it's been closer to that than it has been a store of wealth. And I think that will come back. So again, I created it. What's my Patreon? Anybody wants to go out and look at it. I got 3 tiers, a $5 tier, a $10 tier, and a $50 tier. Why a $50 tier? Because you get 45 minutes of one-on-one phone call. Ask anything you want. Okay. Use it how you want. You want to learn more about options. You want to get taught this. So once a month, you have that call plus all the stuff that comes with the 5 and the 10 and some special videos for that group. Okay. So that's coming. So this is just a cue for me to go pull some recommendation. All right. So guys, over here, I have a number of things I've done before. Anybody that doesn't know about my playlist, I only have one playlist on my channel. And even the first, we're just talking about why the bull market will happen. Similar to what I did here, but different. Okay. This was some recommendations I made on May 30th. And then I revisited them on 7/14, made a video saying this is how they're performing. And I just updated them for 8/8 close. Okay. And then I thought, well, let me put in what have they done since 1/1? What have they done year to date? And then what have they done over 12 months, which would take it back to, August 8th. So I've got all that data. No one's perfect always. And remember, when this one's negative on the year, I don't even worry too much about it because that means it got up high and it pulled back. But look at this. Look at a year-to-date gain. You guys get excited about HOY or Hood, right? Because these aren't income funds. There's some phenomenal stuff going on. Wait till I show you some of my 700% stuff. Not even on my recommendation list. This is an area that's just getting started. Literally, some of these are up 5 times now, there's a few of them that'll be 100x. Now, again, that's hard to find. And knowing which one, I can't tell you. What do? I buy a handful of them because they're not all going to do that. But those are the ones that hit the discoveries. It's just plain and simple. How do they get that high? They hit discovery. What a really good mining company is going to do? 3 or 4 times. But that's in 4 or 5 years, guys. So are you sure that, that's BTC like stuff, if not better? And then some of those little explorers are like your meme coins. It's just I'd rather be in an area I know. Okay. So I'm not going to read you every stat. And I talk about these upper 10 picks are producers. They should 3 to 5x in 3 to 5 years. Less risk, but potentially less gain. There's probably no stock in here that's going to go up 20 or 30 times. But look at these highly leveraged silver miners, right? They've woken up, guys. Just in, what is this? This is 45 days. This is only another 3 weeks later. So this is 3 months. Well, no, it's not even that. This is June and July, and then 1 week in August. So look at these changes from here to here. So 2 months in a week, 50%, right? Nobody's negative on here. I color coded them green when they really 30% average. So I list these. I can't hide from what I make videos on, guys. They're all out there. It's all, Somebody said, "Well, yeah, but you didn't say that. You didn't tell us." There's some that I listed on here back in May that are up 300%. Some of the little critical minerals, Talon metals, for instance. I talked about that in my video. So, but I tried to go, those are what I call risky, but the upside is massive. And I'm going to show you some of those in my database. I got a database of over 750, I think now, miners. And I'm just going to take it on 1 week, 1 month, 3 months, right? I'm going to go on 3 months and I'm going to scroll for the highest percentage gainers. And you're going to see some 1,000%, 700%, right? 1,000% in 3 months, right? That's like some AI darling. So know that they're there, okay? Risk and reward. So again, I put the market cap in here. These aren't little baby companies. You see a B in there, right? He had a few, 456 million. There's some I buy that are 4 million market cap, but they're drilling. They had good drill results and they're drilling a lot more. I tell you, if they hit, they're going to run to 100 million. What's 4 goes into 100, 25x. They may only move up 18x. But that's the kind of stuff you have. They're a whole different, they don't package products. They don't say, well, the consumers aren't buying. They have ready buyers. It's a whole different world. Let me talk about miners. So they go, what do they need? They need people, they need labor, and they need machinery, and they need fuel. Oil's down, guys. Oil was higher in the 70s bull run, was higher in the 2011 bull run. I think it'll be higher than it is now in a few more years because part of the commodity super cycle, but because it tends to follow gold by about 18 months. But having said that, right now it's cheap. These miners are printing money and it starts to get the fever going. Why isn't it already here and why hasn't it been blowing out? Because analysts don't care about gold. They really don't. It's just not on their list. They'll finally come out and say something when they just can't ignore these massive, beats on the income side. But they're not going to tell you in advance. What's their job? They're supposed to be out there predicting how good it's going to be, and they don't. They're just not that interested. And a lot of you aren't. A lot of you guys are, GMEs and, all the other stuff out there. FOMOing into everything, right? The next meme coin, instead of really looking at this sector and saying, this is what's happening. This is, look at housing now. Housing starting to turn. You asked me another reason why I think the markets are near a top. Housing is hurting, and it's only going to get worse. I mean, this is looking, there's a market opportunity short the home builders. They're already started down. That opportunity was probably 6 months ago, but I suspect it's only going to get worse. They're trying to give them away, but they got a certain fixed cost in there. All right, guys. So these are my previous recommendations and how they performed. Some more. All right. So I have some new ones. And some of these are repeat. So understand if they're on the other list, but Guanajuato isn't, Hochschild isn't, Discovery isn't. I think Fresnillo, Avino, Coeur d'Alene, Hecla was, First Majestic was, Pan American was. These are new. Andean Silver, Andean Precious Metals, El Dorado, and American Gold and Silver. So these haven't done bad. I mean, look at this. Well, same time frame, guys. This is my August recommendation. I'm just showing you what they've done in the rearview mirror. And actually, you say, yeah, but Bruce, that's a loser. Well, then you ought to load up on it because it's a great producer, okay, of silver. And that's all right. Just because it's down, this means the market doesn't get it always. They don't buy them all. This is right here, Guanajuato. The reason I see them doing extremely well, they need a little bit higher cost of silver. They start to get really profitable when silver's 30 and above. What kind of environment are we in, and what do I see going? So that's why sometimes somebody lags. Another one may have a cost of all-in sustaining cost of $20 on silver. So they've been doing really well for the last year and a half. But if somebody takes really 30 to really turn because they had a lot of capital to build their mine and they're just starting production, but they got a lot more silver ounces in the ground, then that's the kind of company that's going to go to. So I could go on and on with the mine talk, right? But think about that. You dig a hole, you need labor, you need heavy equipment. Hopefully you got a good management team. I'm very cautious about who I invest in. And it starts with a management team. How about insiders? I don't even touch them if they don't have 15% insider ownership. I prefer 25. So you got to have that. There's a lot of things to look at on there. Are they in a safe jurisdiction? I've already had a couple of miners, right, that I had to wait a long time to get my money back. And in a couple, I got my money back and more. But I don't like sitting on the fence being stuck in a position for 3 or 4 years while they go to international court because a new president comes into the country, or a new mine manager, vice president of resource management in Ghana or Cote d'Ivory or Mali, and decides just to take the mine. Oh, that's ours. Yeah, but I have a contract that's good for 50. Oh, yeah, but that was the previous administration. They're not in power now. I'm in power. Don't think it doesn't happen. It does. Does it happen in Canada and the US? No, but do I value a mine in California less than I do in Nevada? I lived 50 years in California. Yeah, I worry about the green piecers and all that stuff in California and Oregon than I do in Washington, Wyoming. Well, I shouldn't say Washington, but Wyoming, Idaho, Nevada. There's certain areas that typically have resources in the U.S., right? All right, guys. So let me do my final piece. So, I mean, again, look at the numbers. I'm leaving them on here. Just take a look at this. Okay. So I'm not embarrassed ever to tell you I recommended something. If it goes down 20%, buy more. Okay. That's a different feeling. Guys, I've said that. I showed you GDXY, right? When I was doing, oh, what happened to that? Yeah. All right. So my issue is, this is a horrible chart. Yeah, I know it's paying because when I know what to do, I don't want to play income funds, but I always tell you to be bullish. And I've been saying since GDX came out, okay, that I liked it because people ask me, what's a long-term bullish? Can I say 20 years? No, absolutely not. But can I give it a 5-year thumbs up? 5 more years? Yeah. Is it going to be volatile? Is it going to do what Palantir and NVIDIA does? Is it going to run like crazy and double and then pull back half of that? You betcha, right? So if you just want to leave it and forget it and buy one time, you're going to be frustrated. If you're DCAing in, you're using, some stops, and then when it drops, 10, 20 points, depending on the price, you're buying back in, you're lowering your cost, right? There are many ways to do that. So for me, I just go out to GDX and sell puts. I was selling puts on Newmont like crazy. It was so undervalued. I sold 50 puts and I sold 55 puts. Then this last time going into earnings was around 59. I sold a ton of 57.50 puts. I'm willing to get it and collect $4 or $5. And guess what? I could buy it back for $1.50 now. I sold it for $5. But I don't. Newmont's not going anywhere but up. For a while. Will it pull back at some point? Sure. But it's a $60 stock now, or 63 something. It probably should be 90 or 120 based on its multiples and based on what it's earning. And so it will be. It'll be 120, it'll be $150. So what am I going to do? Every time I see it pull back a little, I just sell some more puts. Okay. Now, you need to be in a financial situation in your margin account to be able to do that. But that's not my issue. I'm in a margin account, but I don't really use margin. But to me, that's just a way to make money. So when you guys are in your income fund, I'm hoping and praying that we're going to get some better income funds. And 2X, wouldn't I love to see a 200% leverage on an income fund that was on GDX, knowing what I know about where it's going? And then if I get, like it goes on one of these massive runs, I just get out of that income fund for a while and go buy a 2X bear that isn't a high income fund. All those tools exist, but you got to know that's why I'm creating my Patreon, guys, because I want to play this even better. I 8x'd in the last big run. I'd like to 15x on this one. I don't even know what I would do with that honestly now, but that's besides. I still have that desire. All right, guys, final thing, I'm going to let you go. Just give you an idea of some of the things that I can do for you in there. So this is nothing more than my database, right? I can sort it in a whole bunch of ways. I'll be adding market cap. I'll be adding more. Right now it's in alphabetical order. So what do I tell you? I tell you a company name, I tell you a location, and sometimes they're various, right? Bosnia, Serbia, various, Australia. By the way, Australia is one of the massive countries for gold miners. I mean, Canada, Australia, Mexico, more silver than gold, but certainly a lot. Latin America, good for mining. Brazil, because it's such a large country. Chile, Peru, Argentina. And then I typically give you the international symbol. Once in a while, they won't have a North American symbol. Right? But I try to give you both when I can. And then I go through a 1 month. Okay, what's the price 1 month? What's the current price? What's the gain? What's the 3 month price? What's the 3 month gain? 6 month. And then I go over here, since I tend to buy only US based ones, right? I sort more over here, but it's sorting the other column also. So now I want to look at a week. I want to see if somebody pops up and maybe hit a drill. And I can't see the news on hundreds of miners, right? But I can sort my database, right? And if I've got it in green, that means I think it's a real buy. And there's plenty of buys on here. It's just I'm looking at the smaller cap guys that I already know and own Anikio Eagle. Mine's one of the best mining. Them and Newmont now are the best mining company in the world. I'd give the favor to management on Anikio, but I give Newmont undervalued still in relation to that. And you need a whole lot more inside ownership. What's their plan? Do they have? Are they permitted? Are they going to build a mine? Are they a buyout candidate? There's all kinds of things to know, right? So I'll expand on some of this in time. But how about we just do a sort? Let's see who's trending. What are the big? And remember, when I sort, there's a whole bunch of not applicable because some of these little companies in here, they're on the pink sheets, and they trade such low volume they don't even give a price quote for that day, so you'll see an NA in here. And then I don't tend to buy a stock that says, oh, it went up 50% in a week, and I look and it went from 1 cent to 2 cents, but I look over the last 2 years and it's constantly going between 1 cent and 2 cents. Not relative, right? Nothing's really happening. So don't think because I see it that I go out and buy that. You have to know the difference. So there's just some fabulous things. I start with seeing who's performing, and then I want to know why. And then if I see somebody that I know is not performing, but I think is about to perform through my fundamental analysis, right? So let's go over here and sort this from high to low. Now, again, I start with a lot of my NA because remember, I got almost 800 in here. Sometimes it hangs up when I've had my computer on. Okay. We'll get there. All right. Oh, that's not bad. So I got St. James Gold in Canada. What do I know about them? One week they're up 325, 1 month they're up 75. But again, 2 cents to 4 cents. Is that just momentum? People are trying to FOMO. So when I do that, then I go out and I dig into them, right? Okay, who's behind them? I look at the management team. I look at inside ownership. I look at the grade. Is it open pit? Is it deep? Yada, yada. I go through a whole bunch of things there to say, is this something I want to own? Okay. And when it's a discovery and they're continually drilling and it's moving and I like all this stuff, that's when I buy. Okay. And there's some good ones in here. And just because I could be buying a company that's down 2% in the last month, it's not a problem. But I start with why would somebody move that big? And sometimes, a penny to 3 pennies is like 200%. So they're now, though something's going on, they're at 17 cents. A month ago, they were at 2 cents. So it's not something's going on. That's discovery based, no question. So is there more? Now I want to know about St. James. This is how I use the database, guys, to come up. And I label these as risky because what if they go and then the CEO says, well, I'm thinking it's a 10x from here and it's going to keep going. And the CEO says, nah, we just want to sell out. And they sell out for 40% premium. That's not what I took the risk for. So I try and assess as many things as I can here. All right. So they're dropping down. Well, that's not bad. Oh, and then what's the trend? So let's look at, I can tell you companies I know real well. So this one's not doing bad. 3 months, it's up 87%. It's up six. Some of these I own, right? I'll tell you, I own a good 30. I own Silver Storm. Love Silver Storm. I think this got a lot of room to run. This is a near-term producer in Mexico, silver based, silver focused. Nobody's exclusively silver. Goes back 12 months ago, it was 8 cents. It's now 16 cents. So anything up 100% in a year. But it's how many ounces they have in the ground, right? They plan on being in production in the fourth quarter. When you look at a Lassen curve, I think it's called, Lassonde curve, I'd have to look it up again. They talk about through the cycles of mining. So when these companies, and what'll happen on these juniors is they're real small explorers, they'll go out and they'll raise capital. And then they'll take, maybe they only got a market cap of 5 million. They go to the bank, they go to other benefactors, other investors, and they show them some of their mapping, their geophysical, their magnetic resonance on the, we think it's this, or hey, so and so owned it and they pulled out 4 million ounces over this period. It's been on care and maintenance. We raised some money, we bought it. Now we want to raise a little more money to do drill. We want to drill this many meters, this many holes, and they get people to put money in and they get shares back for that, maybe a warrant, something else, an option on the company. And so they progress. Well, if these guys start hitting good drill results, okay, and remember, a lot of these are in areas where it's cold. They only have 4 or 5, 6 months that they can drill. So they drill, and then sometimes the companies that run the assays that tell them the drill results get overloaded, right? Depends on the region, the time of year, weather, the area. So there's all kinds of things that play in here. But Silver Storm in Mexico. And what'll happen in these things? Mexico's been slow to permit. Scheinbaum, the lady pres down there, says she's okay with open pit, she's okay with mining. But here we are in August. I just saw an analyst talk about this. Somebody I respect in the industry. And he was saying, hey, I'm a little worried in Mexico right now because we haven't seen any of her permits yet. But I think it's forthcoming. I don't, it's money to Mexico. It's an industry. They're very big in mining. All right. So what else? 60s, 50s, Harvest, Abcor. Let's see if anybody else stands out. Kingfisher. Oh, look at my Talon metals. This is a critical metals one I talked back in May about. TLOFF. 1 month gain 50%, 3 month gain 200%, 6 month gain 400%. Not bad. Now, these you got to be careful with. Go look at a chart. Don't run out and go, Bruce said that, it's probably going to go to 1,000%. But where is it going right now? I'd have to look at the chart, right? I'd have to read what they're doing. Are they still drilling? Are they doing more? Are they waiting on permits for a mine? Just understand what their rare mineral is. Go, all of your due diligence. You have to do that, or you have to have somebody like me or a subscription to other people's things that you trust that you can keep up to speed on, guys. So let's look at the 3 month. Maybe there's some people that jump on the 3 month cycle that didn't show up on the 1 month. Sure, you have that. They've flown up and now they're slowing down. That's okay too. Guess what think of that bull flag, right? You got a flagpole going up, now you're flying. So you may go down a month or two, 5%, 8%, 12%, but you had that, 100% run or that 80% run. It's a flag pattern, guys. They're just, finishing the drilling. They hit a fantastic hole, and it's going to be another month or two before they release the results of the next 12 holes. Now, when they're already a producer, they go up much closer to the metal price, but they're not going to go up 100%. They may go up 10% over the cycle, 5%, depends on what their market cap is now. And whether they're able to discover more themselves, even if they're big, and or who they buy. Are they going to buy ounces in the ground, right? Typically, you want to buy somebody that's near you. You don't want to have to build a new mine. So your 3 month, just think about this. How many 3 month companies, 5, 12, 212, 200, 200, 192. Look at this. That's a lot of companies, guys. Silver Tiger metals, love them. This is one of my recommendations on platinum. SBSW. I have 3 recommendations on platinum. Platinum is the highest percentage metal up this year. And I recommended SBSW 2 months ago. I recommended ANGPF. And I recommended PLG. And PLG is the biggest and has the most potential of all of them. And it's gone up the smallest amount of them, but it's gone up. So I think it's just going to be a giant as we continue up in the white metals. Platinum and palladium, especially palladium, are used in industry, right? Platinum has a lot of capability. Platinum is so undervalued relative to gold. Historically, it's always been more expensive than gold. Way underpriced to gold. Love Silver Tiger metals right now. They're really onto something. Again, I'm a little cautious on the permitting. I'd have to see if they're waiting on permitting. Aftermath Silver in Peru, massive amount of ounces in the ground, massive amount of ounces, and they haven't really performed to the same level. Look at that, 14% in a week. I take it back, guys. 88% in 3 months. But no, only 72%. So it's really been in the last 3 months. But look at the 12 months. But guys, this is nothing. I'll give you a prediction here. And this is a crazy one. Comes from one of my cycle guys. Anikio Eagle Mines, AEM. big, second largest, third largest mining company in the world. Or I should say, because there's bigger mining companies that do different, like iron ore or somebody, but precious metals mining. Okay, clarify that. They're 135. I think they could go to 1,000 to 1,050 in 3 years. Now that's crazy. Normally you say, Bruce, you said they would 3x gold. But if gold goes 3x there, that they 9x themselves. That's crazy because there's no real downside to Ignacio Eagle. Nikio Eagle. There's just no downside. Great management team in production, have mines all over the world, almost all safe jurisdictions. I believe they all are in safe jurisdiction. Doesn't mean a country doesn't turn crazy, but I don't think so on where they are. But you got to be patient. You got to wait 3 or 4 years. I'm up almost 200% on my AEM now. I bought under 50. And I remember for a month or so, it just would go up 3%, down 3%, because the miners weren't doing anything. And I'm like, gold's starting to move up. Why aren't the miners moving? Patient, my friend, patient. Okay. Probably Barton Gold, another fantastic Aussie company. Look at this 12-month up 266, up 83. This one's been disappointing, but I think it's going to come out of its funk. I say it's been disappointing because it was a lot higher before. 106, 153% in the last 6 months. 1 week it's up 26.92 because undervalued. It's been way higher now. Guys, I forgot to tell you guys on the charts. I mean, think about that. We're just now in the gold miners on that ASA, the first chart I showed you. We're at the equal top of 2011 and 1980. Well, one of them was 850 gold, the other was 1911 gold, and we're now 3400 gold. And the miners are valued as if gold is 1900. It makes absolutely no sense. All right, guys, I'm done. It's just, let's look at, I said that I'm going to do one more. Is there anything on the week? That's wild. I just showed you a 26. Here's a 19, a 17, a 19. I'm going to have to do a 1 day soon. I look at my own count. I've had 20 in my highest about a week ago, and then a couple weeks ago, I had a miner up 24.98 in a day. And then some up 19. I see 19s and 10. Look at that. It just, okay, 325. How many stocks do you know up 325% in a week? How about 100%? Yeah, this one I ran forth 1 to 2 cents. This one 3 to 6. How about 4 to 17? Oh, that's the one I showed you, St. James. Something's going on there, guys. 13 to 20. 2 to 3, not so much. 17 to 24. Idaho Strategic, probably a critical mineral. May not be. Could be just gold. There's Talon again, right? Up 36. Core Mining. Guys, this is a massive company. This is a major silver producer. And Hecla right there with them because silver's waking up. What are they going to look like at $50 silver and $100 silver? They're going to be 4 or 5x of where they are now. And they're producing very little and paying a little, small. All right, guys, I'm going to let you go. This is Bruce with Targeted Wealth Creation. Hit me up with some questions. I'm going to start developing the content or my Patreon. But I think it's a good way because you guys ask a lot. I don't, and if nobody signs up, I'm okay with that too. I don't have to do any additional work. But I'm not going to continue to do all my database, and I'm not going to have recommendations on certain miners and then drill down and tell you what price to buy at. Don't buy at this price. Look for this. Okay. I can't give away all of that without it being behind some kind of curtain that I get rewarded. It's just too much work. You guys are subscribing. I love my subscribers and all that, but I see channels that do a third of the effort that I do, and they've got 20, 30, 40,000 subscribers. So I'm not making it for the amount of work. And I'm going to continue to dig on this because I can make so much money myself if I can help you guys make money along the way and you want to give me some small money back for it, I'm okay with that. And the joy of knowing that I've helped you. All right, guys, I'll let you go. This is not financial advice. I'm not a financial advisor. Bye for now.